Hello there, my name is Jack Watts, lead analyst for AHTB Cereals and Oilseeds. This is a brief grain market update on the 18th of November 2015. Unfortunately, grain prices remain very much depressed, with May 16 feed wheat futures in the UK challenging recent lows, so touching on £118 per tonne. A few factors behind this right now. Currency is a key factor in all of our commodity prices right now, with some sterling strength coming into the mix. Essentially what we've seen is a 1.6% appreciation in the value of sterling against the euro, and this is a long-term factor that we're probably going to have to deal with going forward, the relative strength of sterling against some key currencies. That's important for the wheat market because the majority of our exports by far go into Europe. On the other side of the export equation is into the dollar zone, into the world market, where not so much of our wheat goes, but we may find some opportunity. Yes, the UK sterling is weak against the dollar, but so are many other competing currencies, not least the euro. This is where barley has, from a UK perspective, a bit of an advantage, given that UK barley has much more of a presence than wheat on the global stage. And that's having key implications for export pace. Key factor in the market over the last week or so has been the release of the latest USDA supply and demand numbers. Not much movement on wheat, but the key influences at the global level has been what's been happening with the global maize supply and demand estimates. Notably in China, the USDA have made some big changes to their Chinese data. Essentially, they've increased their opening stock maize estimates by 20 million tonnes. Essentially that has given the illusion of greater supplies of maize in the global market. Essentially that takes world stocks up to essentially 80 days supply equivalent from 70 days previously. I think it's worth bearing in mind though that for a lot of the key producer exporters of maize there hasn't been that many changes, and it's sort of a long way to go essentially for the South American crops which are growing right now. We're approaching harvest over the next few weeks. So it's a pretty negative environment at the moment for prices on a lot of those fronts. And the key thing of the market, particularly in the UK, is the price carry that we have from the spot market right the way through into the forward markets. Essentially, there's so much supply of grain in the UK market that the spot price is having to discount to forward prices to essentially encourage the longer term storage of grain. And we look at the key benchmark difference between the May 16 futures price and the Nov 16 futures price, the price difference essentially between the old crop and the new crop. And as it stands at the moment, there's around a £7.50 premium of the November 16 price over the May 16 price. There is a risk though that price spread could widen further if UK exports continue to be sluggish through the year. It's worth bearing in mind that towards the end of the 14-15 season we saw May 15 futures up to and over a £10 a tonne discount to the November 15. So we know that the relationship between these two contract prices can widen. So that's a risk if exports from the UK continue to be sluggish, and particularly if we see an uptick of selling of grain into the spot market by farmers as well. On the theme of the new crop, we're starting to learn gradually more and more about, particularly about areas in the UK. Recently, we've seen the release of the survey results of the early bird survey. A full analysis of that data is on the AHTB Cereals and Oilseeds website. In essence, the wheat area isn't expected to change that much into 2016. Slight decline by 4% for the winter barley area. Expectations of a rise in the spring barley to the tune of around 10%, although have to be cautious with this one given that crop hasn't even been planted. And the big mover is really what's happening with oilseed rape, a 15% decline in the area. Although a big move, it's probably not all that surprising given what's happened with prices and the risk and costs associated with growing that crop. So it's a case of watch the space. So we're gradually learning more and more about the new crop situation. Of course, it's all going to be subject to weather conditions as we get into 2016 and into the spring to see what growing conditions face the crop. From a UK point of view, the last 2 years have been very good and delivered yields above budget. Globally, we've had 3 very good years, but weather remains an integral part of the market. So although we're currently experiencing some very low prices, some very low distressing prices right now, it's important that we don't get complacent about them and keep a close eye on markets to see as and when rallies occur. Thank you.